on Finviz, a full view of how you can be great at using Finviz, which is an awesome free tool to help you find stocks to invest in, stocks to trade, and how to identify what sectors are hot, and a few other things, right? Just so you get an overall view of what the market's doing. So first things first, on the homepage, when you first click to finviz.com, when you land on the homepage, you're going to see the Dow and NASDAQ and S&P 500. This is how they're doing on the day. So you can see this one's down 0.4%, NASDAQ's down 0.7%, Dow's down 0.29%, right? So the dotted line here is the previous day's closed, so that's why it's down, right? You can see here, if you're looking at your candle patterns, how price came down and then it popped back up, and now it's actually getting to a point to where it's better than it's been all day, but it's still down compared to yesterday's close, okay? The next thing to look at, which is pretty cool, is you can see what are advancing and declining, right? So there's 1,900 total advancing and 5,700 declining, or about 5,800. So you got 24% of stocks are advancing when the stock market is down, right? So this is it's a good indicator to show you that most stocks move on a day-to-day basis with the overall market, okay? These are all down, so it's no surprise that 74% of stocks are declining, which is a pretty accurate slice of what people usually say, is that 75% of stocks move with the market, right? You got some that are making new highs and some making new lows. Still have 182 making new highs, right? So if you look at the overall market today, it's down. But in the grand scheme, if you're looking at the simple moving average, the 50 period, you still have 80%, just about 80% of stocks are above that 50 period moving average. You have 88% above the 200, right? So today's a down day, but in the grand scheme, we're still in a bull market, okay? There's a few preset signals here, so top gainers, new highs, overbought, unusual volume, upgrades. So you can click into some of these if you want to see how they move. For instance, if you wanted to check out this one, it's a top gainer, right? It actually moved quite a bit, so I don't know what happened there. But if you click on the signal, you'll see that it'll take you to this list of stocks that are the top gainers for the day. And this is like basically a snapshot, right? So you got the chart, some of the news, the recent news, right? So today you got, looks like this company triples after isolating antibodies and treatment of COVID-19. So they have a COVID-19 treatment. It was trading around 20, now it's up to 48. And it actually looks like it opened up high, it came out, it sold off a ton down to like the mid 30s, and then now it's actually recovered back up to 48. So it's actually pretty cool. G-Tech, so here's another one. You can just look to see right here why it's moving. Agreement with a Chinese, I don't know, with a supplier or something, right? So this one's up, but it sold off hard on the day, right? So it opened, it went up high above 25 and sold off, but it's still up over 100%. All right. So you can kind of click through these. I like to make my own screens, but I'll show you something else first. So if you want to, you can see, click on maps. This is a pretty cool tool. So you can see that the size here, this is 1 day performance. You can click this out and go and look at 1 month, and you can look sector by sector. The size of the square is the market cap, okay? So these are the largest companies, that's why you're seeing those. And you can see Microsoft, Microsoft is up 15% in a month, Google's up 20%, Apple's only up 2%, right? So it's lagging the other big tech stocks. Tesla's down 3%, right? So it's underperforming. Then you got all these different sectors here. Healthcare, you can see who's leading and who's not. So if you just click on that, consumer electronics, it's pretty cool. Pretty cool shot there. So then you can say, all right, what else do I want to see? You can look at all the ETFs. So you can say, I want to see the ETFs. Let's look at a 3-month performance. Which ones are up? Which ones are the largest? So if you look at large cap growth, you can see IWF is up 11.6%. You got VUG. You can see here within that U.S. large cap growth, the ones that are performing the best, at least in that shot. So FTC is up 18.5. You can see that there. These all look really good. Large cap growth, right? In 3 months. I mean, November to now has been one of the best times in the market I think I've ever seen. You can see what's doing well, the U.S. indices. So this is actually pretty cool. You have a shot of Dow Jones, SPY, QQQ is NASDAQ, VOO is also S&P 500. So you can kind of cruise through those and see which ones you like. And then you have sector ETFs, right? So XLK, you got technology. SOXL is the 3X semiconductor. You can see that thing's up 93% over the course of 3 months. So this is one I like to trade. It's pretty cool. And so you can just kind of click around and see, what the returns are. RETL, that's retail, that's up 156%. That probably has a lot to do with the fact that GameStop and some of those other retail stocks are up a lot. XRT is also a retail ETF. So you can play with this on your own time. Volatility is down quite a bit. You can see those. So lastly, I like to look at, or not lastly, but next, groups, right? So this is pretty handy. You can take a look at which groups are doing the best on a given time frame. So in the week, energy is doing the best, right? Oil and stuff like that. Financials are also up. If you zoom out and give yourself more of a macro view, in 6 months, communication services, financial technology, those are the leaders. So you will often see normally that at least some of these will be red, but everything is actually up in 6 months. Everything is up, actually almost. These are down in the past 3 months, right? But for the most part, everything is pretty green. So energy, technology, basic materials, you can see all that stuff here. So what you want to try to do here is identify, like, is there something that's up and coming? Something that was here in the 3 month that's popped up to the top. So communication services in 6 months is doing the best. And on a 3 month time frame, basic materials, technology, and energy have done better. Energy also, includes some of the electric vehicle stocks, as well as some of the solar, right? So that's why those are up quite a bit. And in 1 month, you can see that energy's not so hot, right? It's been lagging in the 1 month. Communication services, this is up. Communication services is like your Facebooks, Twitter, Snapchats. That's why this is up so much, because those stocks have jumped quite a bit. Technology's up, right? Real estate, REITs. So this is one way to look at it. It's pretty cool. Okay. If you wanted to check out industries within the industry, let's see what that looks like. Textile manufacturing. Okay, this is just 1 day, so that's not going to do me good. 1 week. Uranium. Maybe that's something we should be concerned about. Anyway, so screener. This is the bread and butter. This is where I am most of the time when I'm looking at trying to identify which stocks I want to buy and get into next, right? So I've created some of my own presets. What I'd recommend doing, click on all, and then just kind of get a feel for this, right? There's a lot of tabs here, but if you hover over them, you can see that it provides you with an explanation of what those fields are and what they mean. So you don't have to be a finance major or have gone through corporate finance or investment classes to look these up. You can just see what it means, right? So if I do price to free cash, it's the valuation metric that measures a company's market price to its level of free cash, right? So if you think about that, you say, okay, price to free cash. I want this to be low. Like, I want the price to be relatively low to the amount of free cash. That shows me value, right? Earnings per share growth in the next 5 years, right? You want this to be high. Sales growth quarter over quarter, you want that, and if you click on these, you can see that there's some preset filters here, positive, high, low, right? So you can kind of screw around with these. What I've done is created a bunch of my own, and you can click, once you dial into some of these filters, you can just click save screen, and then it'll allow you to save whatever you've done, and you can name it. So if I wanted to look at everything pulling back to the 50-period moving average, now's a good time to do that, because you're going to see a lot of stuff pulling back because of the weakness in the market in the past few days or so, right? So the way that I have this sorted is market cap descending, okay? So these are like the largest companies that are small cap and higher that have a price below the 20 period but above the 50. And then, you know, you can read the filters here, right? So oil and gas, ABB, you know, these are different companies. This one looks like it has a pretty cool, so this is Keurig. This is Dr. Pepper, okay? Keurig. I like the fact that it has these wicks here at the bottom. So let's take a look at that. So it's wicking at the bottom here. It looks to be kind of a support level, right? Yeah, it's coming back down right to this previous high. So maybe this is one that you would want to enter, right? So what I'd do then is look at, okay, what are some of the recent coverage analysts saying, right? It has an outperform with a $40 target. It's kind of mixed here, right? You can look down and see what's some of the recent news. Okay. Paul Tudor Jones's top 10 stock picks. That's pretty cool. Paul Tudor Jones is a legendary hedge fund trader. Okay. Starbucks versus Keurig. You can read into any one of these. 15 fastest growing. There you go. Right. So what I like to do, and then I'll get other ideas from this. If I click into this article, I can see here he's got Apple. His top 10 stock picks. Apple. I don't know what this is. KDP. Grubhub. Right, and you can read all about it. It's pretty cool. This is so I love Finviz. You can do a lot of research in a very organized and relatively easy way, right? So these are set to outperform. What was that? Something that just caught my eye. Is this a long-term buy? I saw something where it says these are set to. Oh, here. Coca-Cola, Estee Lauder, 4 consumer staples set to outperform, right? Even in a downturn, people are going to buy Keurigs, right? People are going to buy soda, shit like that. So this is why I like to look at this type of stuff. If you go back to Screener, you can do a bunch of stuff here, right? So if you wanted to sort instead of market cap, if you wanted to say, I want ones that are like literally touching the 50-period moving average, what you can do is you can change the order. So what I like to do, I'll go down here, 50-period moving average, and I'll go not descending because this is going to be ones that are farthest from it. I'll look at one of the in ascending order. You can see that this right here then, right? Whirlpool is literally right on the 50-period. All right, so from here, I'll add these to like a watch list in TD Ameritrade, and then I'll go through and add them to a list and say, all right, what's this doing? Like, look at this KSU. This one looks good, right? Kansas City Southern. And so you don't necessarily need to know everything about these companies, but you can identify real quick, like, all right, this thing, it's making higher highs and higher lows. Maybe I want to get in. This one's only $6. It's an $859 million market cap. Not bad. What's this? Medtronic, I know this company. It's medical devices, $157 billion. Steady uptrend, right? So you can just come here for ideas. NRG has sold off quite a bit. I think this is a solar stock, so it's pulling back to 38. This one looks beautiful. BLDR. I mean, look at this. It comes in, and every time it's touched this trend line, it's popped back up higher. So let me click on this BLDR. Builders First Source. I think this is solar as well. These guys may be a supplier to the solar sector. So if we look at that, right, you can see, I mean, look at this, just higher highs, higher lows, right? You can see right here, actually, it has a kind of a short-term topping pattern, but it's still making the higher lows. So if it can pop up from 40, so what I would do is if you want to be conservative, you can say, all right, I'll put my stop down here, right, at 37.50, or if you want to go a little lower, just to get a little bit below there, $37 is my risk, right? So if the price is at 40 and my risk is at 37, you have $3 of risk for a swing trade. Because you can say if it gets below this most recent low, then I want to get out, because every time it's pretty much held that higher low pattern every time. So if it turns down, maybe I don't want to stay in it. Okay. So if you have $3 of risk, you can just say from there, how much do you want to risk on this trade? If you're okay risking $150, well, then you could buy 50 shares, right? Because 50 times 3 is 150. So if you buy 50 shares, it's going to cost you $2,000. If you get up to new highs, you have $3 of risk here. Okay. 107 million shares float. That means it can move relatively quickly. A company like Apple, they may have like 2 billion shares float, which means that it takes quite a bit to move it. But 100 million shares, it can move pretty quickly, right? You can see it's actually moved from 20 to 40, so it's not too crazy of a grind, of a move up, which is stable. I like those. I don't want something that's going to go up 60% and then crash down 30%. I do trade stuff like that, but for long term, this looks good. And then you can see here, from November to now, we got 1, 2, 3, 4. We got 5 companies or 5 analysts covering it. So 3 initiations, which means more analysts are coming to this stock, and you have 2 reiterations. So these guys are saying, "Yep, I'm still saying it's a buy. I'm still saying it's a buy." Right? So you can say, even after moving up, I'm reiterating, it's still a buy with a 30. I'm moving my target from 30 to 37, and this guy's moving his target from 44 to 53. So this is pretty cool, right? You can see like, all right, November, this guy had a target of 30, and he moved it to 37. Beginning of November, he moved it to 37, right? Now it's at 40. So maybe he'll come out with another upgrade if this continues, okay? 12 best industrial stocks to buy. This is the type of stuff I like to see when I'm looking to buy a stock. Increase and extension of revolving credit, okay? 5 broker-friendly stocks in view amid COVID-led economic gloom. Okay, so just look to these, and 3 improvement stocks poised to continue a winning streak in 2021. Why growth investors shouldn't overlook Builders First Source. So these are all good. New strong buy stocks for January. You get Zach's covering them. A lot of good press about these guys, right? So this is one that I'll probably end up buying this today, right? It's down on market weakness. Nothing came out to suggest that this should have sold off from 44 to 40. It lost about 10%. So this is one that I may say, all right, I'm looking to buy it right here. My risk is $3 away. Okay, so that's just how I would analyze this. So I'll go back and look again, right? What else can I buy? This is $6 stock. If this one's going to end up being, there's a lot of missing data here. I like to see that stuff populated. I want to see like that they're making sales and stuff like that. Energy. Let's see what anybody says about this. I mean, this has crashed pretty hard. They must have come out with earnings recently. You can see a drop on volume. Indecision candle, and then 2 big red days. Right. This could just be market weakness, but I don't know. It's pulling into the 50 period, so we'll have to see what it does from here. But if you were to buy here, you can see also that this was a high, and it's pulling right back to that area. So maybe it's not a bad time, and have your risk like maybe just right here, a tight stop. Okay, that will help you be able to either cut it quick or stay in for a ride from 38 back up to 43. That's a nice move, right? 3 most recent are buy, right? This is 2020, but you have 2 buys in the end of January and the beginning of February. So I like this. Like this one too. Energy, let's look at some of this. Earnings per share this year up 944%. Next 5 years, -12. It's kind of hard to just identify this stuff. But earnings in the last 5 years, 132%. So this is pretty good. Okay. What percent of institutions? Okay, 99.5% of the stock is owned by institutions. So that's also really good. That means that, people are trying to hold this in their funds for the long haul. It says it pressures their debt, right? That's not good. But I'm assuming that this Texas power outages, they're going to be able to get that back to normal, right? So that's probably why it's down, the power loss. And then look at this. I mean, come on. These 2 strong buy stocks could surge at least 30%. This is great. What about this? 4 stocks to watch amid the winter storms and power outages. So if you look into this, you can just see, right? 2-minute read. All right. There we go. One of the leading energy companies could see losses from the winter storm. Shares are down 6%. It's a leader in integrated energy and home services. Reduce your energy consumption. Okay, these guys, Seaport has a buy rating. It's too early to name winners or losers. Okay, it's up to you. You know, where do you want to put your risk? It's all about where is your risk. Trading and investing is all about risk management. So don't buy it right here and then write it down to 28. You know, get in, have a plan for where you're going to get out. You can see this is an area where there was a lot of consolidation, and it's a whole number at 36. So maybe this is where you would want to put your stop. So from 38.40 to 36 is $2.50. Okay, if I wanted to risk, I could buy 50 shares. Okay, and that move would only cost me $125 if I lost it. Right, so that's how I like to look at stuff. So I'll probably end up buying this one too. Here. All right, well that's it. I don't want to make this too long, so let me know what you think.